Morning, everybody. Apologies for the slightly delayed start, but we are now ready to go. Welcome to the Let's Talk About Credit Reports session, which is part of our Talk Money Week webinar schedule. And we've got John Webb from Experian, who's going to be delivering his presentation on credit reports. Just before we get going on that, I just wanted to say a little bit about the charity for those of you who might not be aware of us. So our aim is to be a supportive community in which everyone has the chance to live their life to the full. And we offer a range of services and support, online and offline, both from ourselves and in partnership with a range of specialist organisations. It's important to say that each service is dependent on your situation and eligibility, and we often check this either through your national insurance number or through your wage slip. If you're unsure whether you're eligible or whether we can help, the best thing to do is to contact us. We know that life isn't black and white, and neither is our offer of help, so we do look at everyone on a case-by-case basis. In terms of who we can help, it's all civil servants, current, former or retired, and their dependents can seek the charity's help at any time. Even if someone leaves the civil service, they are still eligible to come for us for help. And by dependents, we mean people who are financially dependent on you. And although the charity is funded by civil servants, you do not need to have donated in the past to apply for help. So we're not a membership organisation. Just by being or having been a civil servant, you're already part of our community. So that's it from myself. I'm now going to hand over to John. And if you do have any questions, if you can pop them in the Q&A section, we'll try and answer as many as possible at the end of the session. Thank you. Thanks, John.
Thank you. And yes, apologies for the late start. That was my fault, by the way. Hopefully you can see my slide on the screen. Yeah. Great. So I am John. I'm from Experian, which is one of the three main credit reference agencies in the UK. The other two are Equifax and TransUnion. And I'm going to talk through a bit of stuff today just around the basics of what your credit report is, what a credit score is, what happens when you apply for credit, and then some of the support we can provide as well. What I will say at the start is, I mentioned the three credit reference agencies. I generally say it's a good rule, check your credit report with all three at least once a year. And you can do it for free. I'll talk about that later on as well. But just to keep an eye on it. Now, they're mostly the same, but there are lenders and companies who share their information with perhaps one credit reference agency rather than all three. So you can sometimes have different accounts showing on your credit reports. So it's always a good idea to check all three when you do that. So I'll, as mentioned, you can put questions in the Q&A. We'll keep an eye on that as we go through. So feel free to pop anything in there as I'm talking. But the start, I'm going to cover off really is just what is your credit report. And the easiest way to think about it is really it's your financial reputation. So your credit report contains all the information about how you've managed credit in the past and also how you manage credit right now. That's because really it looks at what your current situation is in relation to total debt, for example, and also are your current payments up to date. It includes all of your credit accounts, financial connections, so if you're linked to anyone else, some personal details like electoral roll information, and then adverse events as well. So things that are negative on your credit report. Now, I'm going to talk through lots of this content, and as I do, it's going to be predominantly from the view that, you know, people want credit, and at some point you will want to apply for credit, whether that's a mobile phone contract or whether that's a mortgage, for example. And as a general rule, what I'm going to talk through is things around your credit report and credit score. And really what we always say is the higher your score, the more likely you are to get accepted for credit. And, you know, particularly when we look at what you want when you are accepted, it is, it's for firstly getting accepted, but then it's also the interest rates and the credit limits. And really, when you apply for credit, having a good score helps you get lower interest rates and the limits and amounts that you want to borrow as well. But we'll talk about all of that slightly later. I will start by talking about what is included in your credit report. And there's loads of information on here, but generally the biggest section of someone's credit report is their credit accounts. Now, typically we think of these as, your bank account, credit card, loan, mortgage, but of course we take out lots more credit accounts for things, which are all included in your credit report as well. So like I mentioned, mobile phone contracts, home TV, broadband, your utilities, so your gas, water and electric, car finance, some insurances can show as well. And buy now, pay later is starting to show on credit reports. So whilst it's not regulated quite yet, that will, I think, come next year. Some buy now, pay later lenders do share their information with credit reference agencies. So some of it will show to lenders when you apply for credit as well. But typically, the two most important things that show in your credit accounts that lenders are looking at is going to be, firstly, your payment history. So as a rule, as an almost complete rule, we keep information for 6 years. So, payment history on account, we will keep for 6 years. Now, it's most important in the more recent months to a year, but lenders will want to see that you are up to date and you've made consecutive payments on your accounts. If you have missed payments, that will affect your credit score. So they take a close look at that. And the other thing they look at really closely is your amount of debt. So the amount of borrowing on your credit accounts, particularly when it comes to credit cards and how much you use on there, but also obviously your overall debt as well. So they're probably the two key things that lenders will look at. So just moving around this wheel, I'm going to start on electoral roll. And electoral roll is really important. So if you can register on the electoral roll, not only does it improve your credit score, but it's really it's an important factor for when you apply for credit. And that's because the lender will carry out an ID check. If you're not registered on the electoral roll, it can have an impact on your application. So it could mean that it's refused. So some lenders, if they can't verify you, might just refuse the application because they don't want to do anything more with it. But it could also mean that they then go through further ID checks, which means you then have to submit to them couple of bills and statements and an ID document, for example, which obviously lengthens the process. So if you can register on the electoral roll, please do. And also the other thing is, if you move address, make sure you re-register as soon as you move. And that's to just help prevent any chance of ID fraud at a previous address. Because, if you move address and you're still registered and you don't re-register, let's say some bits of mail go to your old address with your personal details on, it just makes things a bit easier for a fraudster to just apply for something in your name, especially if it still shows that you're still registered there. So really important to do that. The next part of your report is for court judgments and insolvency. So obviously quite a serious section of your credit report. If you have court judgments, like county court judgments, or things like bankruptcy or an IVA. Now, obviously, that means there's been some reasonably significant issues with your finances in the past. Now, again, they are kept for 6 years. Bankruptcies can be extended with restrictions from time to time if there's been some kind of issue through there. But again, as a general rule, it's 6 years and they're removed from your credit report. They will make getting credit harder if you've got them there, particularly getting good limits and good interest rates. And what I'll talk about a couple of times I go through is in the bottom right hand side, you'll see something called notices of correction. They are statements that you can add yourself to the credit report. You have to do it separately with the credit reference agencies, but if you have anything negative on your report that happened for a genuine reason, so illness, redundancy, bereavement, something that caused that problem to happen, you can add a statement to explain it. Now, it doesn't change your score, but what it means is that when it's there, if you apply for something, it will get forwarded to someone to manually take a look at. And so that then could impact the decision where it might have previously been a refusal. They may look at it and say, actually, you know what, I do understand why that's happened. Everything looked great before that. So, you know, we could possibly accept this application. And then they may change things like the interest rates and so on, but it does put you in a slightly better position. The next section, which I've called fraud flags, is you will all have a section on your credit report called CIFAS. And CIFAS are UK's fraud prevention service. If you've been the victim of ID fraud, you will sometimes have an entry here because sometimes it's put through by the lender that was involved in the fraud. And what it usually means is that there will be extra steps taken to verify that it's you that's applying for credit. So again, that could mean that they ask for some ID documents and bills or statements just to confirm issues for a bit of extra protection. You can add it yourself. I would only do that if you have been a victim. I wouldn't do that otherwise. But you pay for that. That's, I think, £25–30 for a couple of years. And then the other option is that if you've been the victim and you came to Experian, for example, we will help you through the ID fraud process, and I'll talk about that later, and then we can help add one for free if you do want one. But there is a slightly easier / free option, which I'll talk about now as I move on to notices of correction. I've talked about adding those if you have negative information on your credit report. You can also add something called a notice of correction password to your credit report. Now, again, you have to do it separately for free with all 3 credit reference agencies. But if you've been the victim of ID fraud, you can add this password, which hopefully only you should know. And it means that when you apply for credit, lenders should ask for this password. And then if someone doesn't know it, that obviously stops the application process going through. So it's a slightly easier option than doing the CIFAS, particularly if you were going to pay for that yourself. The other reason to add a notice of correction is for anything that you might consider like a financial vulnerability or a reason that you may take out credit that you can't afford to repay. So if you've got certain mental health conditions or you've got a gambling addiction, for example, you could put a statement on your credit report to say, even if I apply for credit, please do not give it to me because of this reason. And then you would be hard pressed to find a lender who would then obviously lend to you with that on there. So it adds a little bit extra protection as well. I'll just pause for a second because someone popped a question in which says, if you've recently registered for electoral roll at a new house, how long does that take to show on the credit report? So that is as the norm, it's around a month. We generally say for updates for things like that, it's about 4 to 6 weeks to show. However, the annual canvass happens with the electoral roll from around October time to usually they start updating again in December. So they take a pause, and that's when we all get those things through either by email or through the post to say, can you reconfirm who lives at your address? So that's when they do the big reconfirmation. They stop doing the monthly updates for that 2 to 3 month period, and then they start again most of the time in December. So if you register, in March, you're probably going to wait 4 to 6 weeks for that to show on your credit report. If you registered in October, it's probably going to be December before you see it because there's a bit of a pause there. But most of the time it's, or at least for 3/4 of the year, it's monthly. The next section of your report is what we call financial links. It's on your report as financial associations. This is quite an important one. Firstly, because the link to someone is created only when you apply for joint credit. So something like a joint bank account, loan, mortgage. You don't actually have to have opened it. It's just applying, and it creates this financial association. The reason why it's important is that if you have that, when you apply for credit, the lender can check that person's information as well. And if they have anything that's significantly negative on their credit report, particularly like court judgments, insolvencies. That could affect your application. Doesn't always mean refusal, although it could, but it could mean that they increase the interest rates, for example, because they view it as slightly more risky. So so that's why you want to take a look at those if you've got them. And the other reason why is that I told you generally information stays on your credit report for 6 years, but financial links are the outlier. They will stay forever until you break that link. So at the point you don't have any joint accounts with someone except for a mortgage, then you can do what's called a financial disassociation. Now, again, you have to do it separately with the 3 credit reference agencies, but it's really important to obviously break that link if you do so, particularly where you've, been with a partner or previously married, or, you've separated, and you might have that link that just shouldn't exist anymore. It's important to make sure you break it so that nothing can impact your applications. And then the final section on your report is for previous names. So any other name you've been known by, it's on there to make sure all the information's matched up, usually for when people get married or change their name. Previous addresses, so other addresses that you've been that you've lived at in the last 6 years will show on there as well. And then finally, previous applications. So applications stay on your report for 1 year. Now, we usually break these up into 2 things. One is soft searches, the other is hard searches. Now, soft searches don't have any impact on your credit score. They're not seen by anyone else other than you. They are things like using a comparison website to check for insurance or to look for credit. They are checking your credit report, ID checks, mortgage quotations, things like that. Hard searches can impact your credit score, and they are seen by other lenders immediately. They are only for applications for credit. So when you formally apply for something, that will show on your credit report immediately. So we always, as a general rule, say, because they can impact your scores, try not to apply for too many things in a short space of time. You want to try and limit it and space them out. So we'll have a look at what's not on your credit report. So I just talked about the applications. We don't include the outcome of application. So it doesn't say whether it was refused or accepted. It just says that something was applied to. We don't show anything to do with criminal convictions, race, ethnicity, sexuality, and we don't show data, financial data about other people. So even if you're financially linked to something, we don't share their information with you and vice versa. And then I've put a couple of other things on here which are not on the credit report because they're technically not credit agreements. But they're things that people can pay for on a regular basis. So your council tax, paying into savings, and streaming services. So Netflix, Amazon, Spotify, those kinds of things. There's a question mark beside it because you can get them included in your credit score. So we have a free service called Experian Boost. If you're doing any of those things, you can connect your bank account, which is secure through open banking. You can boost your score by up to 101 points. The reason why you would typically do this is because you may have either negative information on your credit report, you have very limited information on your credit report, or you're just not getting many offers for credit. I'll talk about what that looks like in a minute, but you're not seeing places, or you're getting refused for credit, for example. Then you can do this, and what it means is that if your score gets boosted by any amount, it might mean that you unlock new lenders and new offers available to you. So you might have done a search, you didn't bring up any loans that you were eligible for, and then if you boost your score, you might then find that you have a loan that you are eligible for. And that's really the purpose of doing that, is because lenders are looking at that information and saying, actually, you know what, it's not credit agreement, but it's really positive that you're making continued monthly payments to these things, and that shows a sign of stability. So the next bit I'm going to talk about is credit scores. These next 3 slides, I have a big banner at the top of these because they are changing very shortly to a new a new number, but I'll talk about that at the very end. And what I'm going to talk about right now is just the credit reference agency credit score and what that means. So at the moment, if you checked our credit score, it's out of 999, and we will give you a score on that range. We'll put you into a banding so that you can see whether you're fair, good, excellent, for example. It's a really good indicator. The purpose of the score is to be a good indicator of how lenders will view the information on your credit report. And that forms obviously part of your application when you want to apply for something. Each credit reference agency will give you a different score, different number, and slightly different bandings as we work it out, based on the work we do with lenders to say, you know, what looks good and what doesn't, for example. So view them independently and don't compare them side by side, but take a look at each one, see where you stand, and just you can then use that as a guide to see, okay, is there room for improvement, and what is bringing my score up or bringing it down, for example, or what can I do? And then as general rules for credit scores that we give you, the higher your score, it means you're more likely to pay back credit, and the lower your score is generally the more likely you are to have payment difficulty. So that's often because the lower scores typically include a missed payment or so in the past, which then predicts that you're more likely to have that in the future. This is a little bit around the credit scores. So again, some caveats to this is try not to, these numbers are accurate as of today, but don't focus on these numbers too much because they will be changing. What I would do is focus on really what I'm saying is the positives and the negatives, because they will still be positive and negative. And then again, these are just for Experian. So, you know, these numbers can't be transferred to other credit reference agencies and say it's going to be exactly the same, because they're not. But this will give you a good idea of what does positively and negatively impact your score. So things positively we talked about. So registering on the electoral roll can improve your score. No recent applications for credit, because we talked about applying for credit can lower your score. Well, obviously not applying for credit for a period of time can improve your score. Now, balances on your accounts, the lower the better. Now, a couple of these points are saying, well, if you've got less than £100 of balance, or if you've got no credit accounts with a balance, both of those are quite rare. And that's usually because people will have some sort of debt, some credit cards, car finance, whatever it is. So the meaning behind these is actually keeping your debt as low as possible is good for your score. Higher debt will usually lower your score. Keeping accounts for a long period of time is really positive, and also having a mortgage account is positive for your score as well. And some of these are just the opposite in terms of what brings your score down. So I'm not going to cover all of those, but I'll cover some of the big ones really around payments and negative information. So if you've had any arrears, so a missed payment in the last 6 months, but you did bring it up to date, then you can lower your credit score. But it's not quite as severe as if you are currently in arrears. Now, important to say, credit reports update, lenders update credit reference agencies once a month, and they're not live information. So if you miss your payment by 3 days, and then you call them and you pay it and you bring your account up to date, the chances are the information we will have at a credit reference agency will say that you are currently in arrears because you've missed that payment. It will be the next month, if you've brought it up to date, that it will then reflect and show that you're up to date. So so that's why, you know, it's always important to make sure those direct debits and so set up so that you try not to miss any payments, because that can have a significant impact, especially if you're going to be applying for credit in that month. You really want to avoid that, obviously. Court judgments and insolvencies, we talked about those, but they can have a big impact on your credit score as well. And then the biggest impact to your credit score at the moment is to have a defaulted account. This is where you've missed payments on the account, usually somewhere around 3 to 6 months of missed payments. And the lender will then close the account. They'll mark it as defaulted with an outstanding debt on it, which you owe. And then that default stays on your credit report for 6 years from that default date. My guidance to anyone who's in that scenario is if you're missing 1, 2 payments and you know you can't bring that account up to date or keep up to date with your payments, then speak to the lender, the company, as soon as possible. And even if you try to set up some sort of payment arrangement for a token amount, for example, and that's usually because if you do that and you set up a payment arrangement, the chances are they're not going to default the account. It will just sit in a late payment status. But that then gives you the opportunity in the future to bring that account back up to date, which you don't get with a default. And then again, if that's maybe on its own or part of a bigger problem where there are other accounts as well that you're going to fall behind on, that's probably the time you want to speak to a free debt advice provider. So someone like Step Change, National Debt Line, or PayPlan, for example, all do free advice and all can kind of help you go through that process of figuring out budgets, helping you with lenders and speaking to them, setting up payment plans and all of that kind of thing as well. Before I jump on, there are a couple of questions which I'll answer. Someone asked, do you have to be on the open register? No, you don't. It doesn't matter. So the difference between the two is obviously a marketing thing. So you can sell, they can sell your details and pass it on, but it doesn't matter for your credit report which one you were on. You just have to be registered for it to show on your credit report. That's all. The question here, do you have to prove a disassociation with further evidence, or can you say you want to be financially disassociated? A short answer to that is yeah, you don't need to send any proof. The proof exists on your credit report already. So we will know, for example, whether you have a joint bank account that's still open. If that's the case, that would need to be closed. But if you don't have any joint accounts open, that excludes a mortgage. Now, assuming you've probably separated, you can just fill in the form and, you know, obviously tell us that you've separated, and we'll be able to do the dissociation for you as long as there's no joint accounts open. And then the final question just on this list before I move on is what might count as applying for credit too many times in terms of affecting your score? It's a tricky one to answer because it depends on everyone's credit score. I mean, if you've got a very high credit score, applying for 2 or 3 things might have a very limited impact on your score. But if you're slightly lower, for example, and you apply for 1 or 2 things, it might have a bigger impact because there might be less positive things that are keeping you higher. However, we do speak most of the time in general rules. And that is, I would probably not try to apply for more than 2 or 3 things every few months. So, you know, you kind of want to space it out really, like say, over the space of about 3 to 6 months, trying not to apply for more than 2 or 3 things in that time frame. It's a bit vague, and that's because it slightly depends on everyone's credit score, but the bit really we're trying to just say in there is if you apply for something and you get refused for credit, it may have a slight impact on your credit score, but because it shows up and because it may have an impact on your score, if you then go to apply for something else, that lender will see you've just applied for something else, and that might impact the decision in some way, and that may put you at slightly further risk of being refused somewhere else. And suddenly you might have then a couple of applications on your credit report in the space of a day, for example. And it's to try and avoid that time where you might just be kind of panic applying for things and you've been refused for something and suddenly you're applying again. Because what happens then is your options drop drastically for being able to get credit just because you've applied for so many things in a short space of time. Right, I'll jump on for the next one around scores, and this is highlighted separately because credit cards can be both a wonderful way to build your credit score, but also a way to bring it down if you don't use it in what I'm going to say is the right way. And the right way to use a credit card to improve your score and keep it looking really good is to spend a very small amount on it every month to keep it active, which is, let's say, less than about £50. So, if you're using it for an essential like a bit of food shopping, for example, I'm not saying spend it on stuff you don't need, but if you do that and you keep your credit limit, you keep your utilization of your credit limit, so the amount you're spending, very low, then you stand a much better chance of improving your credit score. And obviously, if you pay it off in full every month, so you spend £20, you pay £20 off in full every month, you don't pay the interest. And as you know, the interest rates on credit card can be quite high, especially if it's a credit builder card. So it's maybe your first credit card, the interest rates can be very high. But the flip side to that is that if you do have a credit card and you get very close to the credit limit, that can have a decent impact on your credit score negatively. And if you have a couple of them, and again, you're using very close to the credit limits, that can have more of an impact on your score as well. And also if you have credit cards which overall have a high balance on there, so particularly at say £15,000 or more, you will have a further impact to your credit score as well. And actually you will be slightly impacted again because credit card debt is separately looked at but also included in your overall debt. So that could mean that you kind of lose extra points for that as well. So if you're in that position where you're high on your use of your credit limit and you've got any high debt on your credit card, what I would say is I've put some figures in here, like getting your balance below 25%. They're not hard lines. They're not saying it must be below 25% and suddenly you'll jump up by X amount of points. Think of it like a sliding scale. So the lower you bring your balance and your credit utilization down, the better. So, as you start chipping away at credit card debt and start bringing it down, it will start to have a more positive impact on your credit score. May take a long time, as credit card debt typically does, but if you can get it down slowly, it will start to improve your score over time. But that is all about the credit scores that a credit reference agency will give you. When you apply for credit, it's slightly different. Some of you may know this already, but typically when you apply, the lender looks at three things. They look at the information on your credit report, not your score that we give you. They look at your application form. So really that's your affordability assessment, things like income, children, other expenses and so on. And then they look at their own records. So if you already have accounts with them, or if you've done so recently, they will have records of how you manage those accounts. They take all of that information together and they will calculate their own score for you. They won't share it with you. But for each product, they will have effectively a pass mark. You apply for credit, and if you go over the pass mark, that's great. That's probably where you get accepted and probably where you get, advertised rates and, better limits and so on. Now, if you're below the pass mark, typically that's the space where you could likely get refused for the account that you want. But if you're in a small window, probably around the pass mark, maybe slightly below the pass mark, that's the part where some of you may have seen this, where you apply for credit and the deal changes at the end of the application. The easiest example to highlight is a loan. So lenders advertise a rate for a loan, 5.4%. They have to give that rate to 51% of people. Now, the other 49% of people who apply can get a different rate. And so if you're slightly below, what might happen is that you apply for credit, you apply for a loan at the advertised rate, you get to the very end of the application, they say, great, good news, we're going to accept you, but the interest rate is no longer 5.4%, it's now 12.4%. And that may change things for you, because that may mean that at 12.4%, it might be unaffordable, for example, but you don't know that typically until the end of the application, once you've already gone through it. And so it can change things in terms of what you need and what you can get, which is why I will talk about the process of applying for credit. So to avoid those circumstances, what I would say to anyone is, if you're applying for predominantly credit cards and loans, but this also happens for car finance, and in some places you can do it for mortgages as well, is using comparison sites to check your eligibility. The primary reason is that it does not affect your credit score. It's soft search, so no one else sees it, only you, and it will tell you how eligible you are for products. So individual lenders and the specific, credit cards or loans they have, but it will do that as a percentage. So it'll say, you're 80% likely to get this, you're 90%. And what you might see is that actually you were thinking about going to your existing bank to apply for a credit card, but then you do the search and actually you find that your eligibility with that bank is low for whatever reason. But you might find a credit card elsewhere that you have a 90% eligibility for, which puts you in a much stronger position to know that you're far more likely to get that when you apply. But they can also do some lovely things before you go through the application. So in some cases, what it can do is also tell you whether you are pre-approved. So it can tell you for the loans and the credit cards, for example, if you're pre-approved, so you'll know you'll get it before you apply. And in those cases, it can also tell you the guaranteed interest rate. So the bit we talked about before, where you don't know what it is until the end, it can tell you that ahead of time. So you know exactly what you're going to be paying, and you can kind of factor that in and think, can I afford to repay? I might be pre-approved, and which is great, but does that amount and interest rate work for my budget? And then for credit cards, you can also guarantee the credit limit too, which can be really useful if you are balance transferring, for example, and you want to know, you want a specific amount, or you want to know how much you're going to get ahead of time, so you can kind of start thinking about how much you can move over, or you want to make a specific purchase, for example. The one that you're seeing on screen now, that's an Experian version, but there are lots more out there as well. So, the major comparison sites, some of the other credit score providers as well. You can use as many as you want and as often as you want. And I would just always encourage anyone to take a look at these before you apply, and think of it a bit like your research phase. So it just allows you to narrow down exactly who you should be applying for and what kind of deals you're likely to get. A little bit here, and we've covered a reasonable amount of this, but this is really the roadmap to just building a solid credit score. And typically that starts with three things that are reasonably easy to do, especially if you're starting from scratch, which is electoral roll, having a bank account, doesn't matter if there's an overdraft or not, and getting a credit card, or at least thinking about getting a credit card, because they're generally quite easy to get. And if you use them in the way we talked about, having those three things will start to positively impact your credit score. The next part comes, what I generally say is in life, when you need it. So don't take any other form of credit just to try and build your credit score. You only take it when you need it. So if you want the mobile phone contract, or you need car finance or finance for your furniture, for example, that happens when you need it. And if you do that, great. Just make sure you make your payments on time, and obviously consider how much borrowing and debt you're in, and make sure that it's obviously affordable. But as long as you do that and you keep your payments on time, that's where you really start to bulk up your credit report, and has a really positive impact over time on your credit score. And then thinking about, once you're kind of there, keeping it good, obviously making your payments on time, which we've talked about, but not applying for lots of credit is great. Keeping an eye on your credit report and score, again, you can do that for free, and then just take your time. So nothing in the world of credit reports and scores happens particularly fast. It takes time to build your credit score. So for example, you open up a new credit card to help build your credit score, generally takes almost a year to start getting positive impacts from that, and showing on your credit report, as long as you use it in the way we talked about. So it does take a bit of time for that to happen. The only time you can make substantially good improvements to your score is paying off a huge chunk of debt. But most of us aren't lucky enough to just come into a big lump sum of money to pay off our debt. So, you kind of think of other ways to do it. Then a few myths here. Again, I won't cover all of these because some of them we've kind of touched on, but the first is that there's some sort of credit blacklist. So this is the assumption actually still exists that if you've got anything negative, whether it's mispayment, court judgment, default, whatever it is, that there's some list that stops you borrowing. That's not the case. And as I talked about how lenders make their decisions and searching for credit, chances are whatever's on your credit report, there will be some sort of credit available to you. It's perhaps not going to be the best rates or the best limits, but that's where it's really important to have a look, do those soft searches on comparison sites to just see if you can find something that's more suitable for you. And the other really popular one is that, your partner or someone in your family at the same address affects your credit score. They don't. It's just individual, it's only you. And the same for previous occupants of your address. So what we see is a lot of people contacting us because they're still getting bills through from the person who lived at the address previously. They don't have any impact on your credit score as well. And then a couple of other ones. Checking your credit report damages your score. We hear that a lot. It does not. You can check it as often as you want. We give it for free every month, and I'd probably say monthly is a good time to check your credit score. And the only time to really think about checking it a lot more than that is if you are trying to sort out maybe some issues and you have an important application coming up in weeks, for example, and you want to be checking your score more regularly than that. And just a bit around the support as well. So once you've checked your credit report, if there's anything on there that firstly you think is incorrect, and it doesn't happen too often, and what I mean by that is not things like where you've paid off a balance yesterday on a credit card and it's not showing on your report yet, because as we talked about, that happens monthly, so they won't show yet. But if you check it and there's a missed payment that's on your credit report from 6 months ago that actually didn't happen, there was some sort of error at the company side and some sort of dispute that happened, we can help you go through those queries. We do it for free, so you can contact us. We will then contact the company on your behalf. We can add a dispute notice statement to your account, and then we get the update back from the lender. And sometimes they'll say, yep, okay, that is incorrect, change the information. Sometimes they might ask you to contact them directly, but we'll go through that with you when we go through the support process. And the other process we have for this, which is really useful, is if you've been the victim of ID fraud. I talked about this before, again, completely free. So if you've been the victim of ID fraud, chances are that will have either happened because you've checked your credit report and there's loads of entries on there that you don't recognize, or you've started to receive bills, statements in your name at your address, and you need to figure out what's going on. But in most cases, if you're the victim of fraud, ID fraud, you may have multiple entries on your credit report, sometimes 5, 10, 15 different things on there. So applications for credit and new accounts predominantly. If that's the case, you can come to us, tell us what they are, and we will go to all of those companies on your behalf, which saves someone a huge amount of time rather than just going to tell their story to 15 different companies and deal with it that way. In most cases, what happens is they do their investigations, they come back, the information gets removed from the credit report, and sets you back to where you should be. So it's a reasonably smooth process, and we can then help talk through things to just keep you safe around notice of correction, passwords, CIFAS, anything like that. We can kind of support someone through that journey as well. Now, almost the last thing I covered was I went through a few slides with our score, talking about what that is and some of those score factors with, the big banner that says that's changing. Some of you may have seen this in the news this week, which is as of this month and towards the end of the year, we will be changing the Experian credit score range, no longer out of 999, but now up to 1250. The reason we're doing that is because we are including more data. So the way the lenders assess the information on your credit report has changed. They're factoring other bits of information that are in your credit report, and we're going to include that now into the score where it wasn't previously. So examples include rent, if you're paying rent payments and you share the data with us, if you're overpaying a mortgage, paying down your overdraft, if you have a default and you satisfy it or you're making regular payments towards it, that will now all positively impact your credit score as well. So things will change. So if you are a regular checker of your Experian credit score, you will see some changes over the next few weeks. My hopefully biggest and clearest message is that, which I hopefully have explained through this, is this does not affect your eligibility for credit. So us changing our score doesn't change anything around how the lender makes a decision. It's to give you a better view of how the lender is already looking at the information on your credit report. So although you may see a change, don't worry about it, don't panic about it, just gives you a bit of a better view, but the lender will still make their decision based on the three things we talked about and calculate their own score for you as well. And then my final slide is just a bit around getting your report and score. Some of this I've touched on already. So statutory credit reports, they're free from all three credit reference agencies. You can get those whenever you want. If it's Experian you want, you can use our app and get your free credit report and score. And then we have a premium product which is called Credit Expert. That is paid for after a free trial if you've not been a customer before. The reason you might have that is, like I talked about before, you might have certain issues or things you need to go through and sort out. You might have a mortgage application coming up and there's lots of bits that you maybe need phone support with, for example, and so on. But you'll need that if you ever need it. The rest of it you all get for free. And all the service bits I talked about, support services, you get for free as well. That is the end of my slides. We have got a couple of questions in here, so let me have a look to see where I got to before. So right, let me work through a couple of these. So the first question is, why is insolvency less severe than a default? Short answer to that is that's what lenders tell us. So our score is built on an extensive work with hundreds of lenders who tell us exactly what severely impacts a credit score, should impact a credit score, and we work with them on that. At least at the moment, they're telling us that a default account has a bigger impact on someone's credit score than just having some sort of insolvency on there. And the good news is that I suppose from that will slightly change from the new score, and part of that is, I think I mentioned that if you're making positive payments towards an outstanding default, that can improve your score as well, and once you satisfy it, that can improve your score as well. So that might actually, the way that looks right now will probably change once the new score's in place. Next question is, there are companies that say they can help to improve your credit score. Is this something you would advise doing? So that's a tricky one to answer, because I don't know if what you mean by that is the companies that are, they offer products to help build your credit score, which there are some out there. So you kind of pay a subscription, they add it as your credit report, a bit like a loan, and then you pay it off monthly, for example. through that subscription. So there are places that do that. They're not necessarily a bad thing, but for those, I know the FCA is looking at those at the moment, and kind of having a bit of a review about that. The other side to that is, which I'm not entirely sure of, is just whether or not these are these companies that just they want you to pay so they can tell you how to improve your credit score. If that's the case, I would generally avoid that. You can come to Experian Credit Reference Agency and get all the information you need for free, and we can tell you exactly where things are with your score and how to improve it from the source, rather than someone else kind of giving you guidance. Same with the other credit reference agencies as well. Can you get a county court judgment removed if you paid in full? No. So if you have a court judgment and you've paid it, it will show on your credit report as satisfied, which means it doesn't have the outstanding debt on there. The time you can get a court judgment removed is, you've got a window of time, I think it's 28 days from the time it's issued to paying it in full. And if you do that, it gets set aside. Set aside means that it does not then show on the credit report. And then the other one is, if you were not appropriately notified of the CCJ. So let's assume you moved address, you were never told, or you never got the information about your CCJ. Then you can ask for that to be, you can go through the court, and if it's through some sort of process, which I'm not an expert in, but you can get that essentially reissued as a court judgment with your new details on, and they'll do that again. And then your new window of 28 days starts from there. So then that gives you the opportunity to pay it in full, so it does not show on the credit report. So my guidance is, if you ever get a court judgment and it's genuine, if you pay it within that short space of time, get it set aside, and it doesn't show on the credit report, which would be far more positive than having it on there. And then the next one is, can you get an alert if a new application has been made or opened in your name? So yes, you can, but you have to have some sort of service. So it happens if you're getting like even the free services. So you've got your free Experian account, and if you've got some of the others, so you've got providers who give you the Equifax free score and report, for example. Same with like TransUnion one as well. They will notify you if there's been a new search on your credit score, on your credit report. And then you'll be able to go in then and check your credit report and see, okay, well, what was this search? And I mean, if it's genuine and you did apply for it, obviously you'd get alerted, but you'd know that you've just applied for something or just done some kind of search. Obviously, the time to investigate or get one of the credit reference agencies to do it for you is if you did not do the search and it's just popped up and you had no idea that some kind of application for credit has been attempted in your name.
Thanks, John. I think that's the end of the questions. Unless anybody has got any other questions. Thanks. That was really helpful and informative session, and hopefully it's given people a lot more information to go on for looking at their credit report. Just before we finish up, it's really just a reminder, it's Talk Money Week. We still have a couple of webinars scheduled. We've got one this afternoon on grants, and there's one coming up tomorrow on independent financial advice. That's being run by Quilter, and if you sign up to that, Quilter have offered a free 45-minute advice session, so that might be worth looking at. You can register for the webinars via our website on the help and advice section. Just go onto the webinar section, you can register there. You can also catch up on recordings of the other webinars that we've run for Talk Money Week, all except the one from GAM Care, which isn't available as a recording. So thank you very much for joining today. If you do want any further information about the charity, you can go onto our website, which is cfcs.org.uk, where you'll find a lot more information about the charity, the services we run, and also access to resources. So thank you very much for joining, and hopefully we'll see you at another one of our Talk Money Week webinars. Thank you, and thanks, John.
Thank you.